Look, I need to show you something that's happening right now in the banking system. Something most people won't see until it's too late, and by then, the opportunity to protect yourself will be gone. Silver just hit all-time highs near $60 an ounce. That's more than doubled in recent months. But here's what nobody's talking about. This isn't just about price. This is about the entire financial system reaching a breaking point, and silver is the canary in the coal mine. Let me explain what I mean. Right now, we're watching the fifth consecutive year of structural deficits in the silver market. Think about that. 5 years in a row where demand exceeds supply. That's not a temporary imbalance. That's a fundamental shift in how this market works, and it's accelerating. Industrial demand is consuming silver faster than mines can pull it out of the ground. Solar panels, electric vehicles, 5G infrastructure, medical equipment, every single technology driving our future economy requires silver. Not wants it, requires it. There's no substitute for silver's unique properties in most of these applications. But here's where it gets interesting. While industrial users are scrambling for physical metal, something else is happening simultaneously. Central banks and institutions are quietly accumulating precious metals at record pace. They're not doing this because they think the system is strong. They're doing this because they know what's coming. Let me paint you a picture of what's really happening behind the scenes. The Federal Reserve just triggered another round of monetary expansion. Quantitative easing is back, though they're calling it something different this time. They always do. But the effect is the same. More currency units chasing the same amount of real assets. And when that happens, precious metals don't just go up in price. They reveal the true devaluation of paper currency. Here's what most people miss. Silver isn't getting more valuable. Your dollars are becoming less valuable. Silver is simply maintaining its purchasing power, while fiat currency loses its grip on reality. Think back to every major financial crisis in modern history. 1971, when Nixon closed the gold window. 1980, when silver briefly touched $50. 2008, when the entire banking system nearly collapsed. 2011, when sovereign debt fears gripped Europe. Every single time, precious metals surged as people lost faith in the system. But this time is different, and I don't say that lightly. This time, we're not dealing with a regional crisis or a temporary shock. We're dealing with the end game of a 50-year experiment in pure fiat currency, an experiment that's showing cracks everywhere you look. Let me show you the evidence. Commercial banks are sitting on unrealized losses in their bond portfolios that dwarf what we saw before the regional banking crisis. They're technically insolvent, propped up by accounting tricks and Federal Reserve backstops. The FDIC insurance fund couldn't handle even a handful of mid-sized bank failures, let alone a systemic event. Meanwhile, the dollar's role as global reserve currency is being actively challenged. BRICS nations are settling trade in their own currencies. Saudi Arabia is accepting yuan for oil. Central banks worldwide are diversifying away from dollar reserves at the fastest pace in decades. This isn't conspiracy theory, this is monetary policy reality playing out in real time. And silver sits at the intersection of all these forces. It's money. It's been money for 5,000 years, but it's also an industrial commodity that's absolutely critical to the green energy transition and technological advancement. That dual nature makes it uniquely positioned for what's coming next. Here's something that should terrify anyone paying attention. The COMEX, the major exchange where silver futures trade, has a paper-to-physical ratio that's completely disconnected from reality. For every ounce of physical silver in their vaults, there are dozens of paper claims on that same ounce. It's a fractional reserve system applied to commodities. What happens when people start demanding physical delivery? What happens when industrial users can't get the metal they need for production? What happens when investors realize their paper silver isn't actually backed by real metal? We're starting to find out. Premiums on physical silver coins and bars have exploded. Dealers are struggling to keep inventory. Mints are rationing production. The spread between paper silver prices and physical silver prices is widening. That's not normal market behavior. That's a market under stress. And it's about to get much worse. Quick aside here. If you're sitting on significant retirement savings, you might want to look into how gold IRAs work. I put together a free guide that covers how to get physical precious metals into your retirement account without tax penalties. It's in the description if that's relevant to your situation. Worth understanding your options before things get more chaotic. Anyway, let me show you what the smart money is doing right now. Central banks accumulated more gold in recent years than at any time since the dollar went off the gold standard. They're not buying paper gold. They're demanding physical metal, shipped to their own vaults under their own control. They're repatriating gold from foreign storage. They're building their own refineries and supply chains. Why? Because they understand something fundamental. In a crisis, possession is everything. Paper promises mean nothing when the system is under stress. Physical metal in your possession is the only thing that matters, and silver offers something gold doesn't: accessibility. Most people can't afford to buy gold in meaningful quantities. A single ounce costs thousands of dollars. But silver is still affordable for average people to accumulate. You can build a position gradually. You can hold real money in your hands without needing a fortune to start. That's why they call it the poor man's gold. But that nickname is misleading. Silver isn't inferior to gold. It's complementary. And in some scenarios, it might actually outperform. Look at the gold to silver ratio. Historically, it's averaged around 15 to 1, meaning 15 ounces of silver equal 1 ounce of gold. Right now, even after silver's recent surge, that ratio is still elevated compared to historical norms. If silver simply returns to its historical relationship with gold, we're talking about massive upside potential. But here's what really matters. Silver gives you optionality. In a functioning economy, silver's industrial demand drives value. In a crisis, silver's monetary properties drive value. Either way, you win. That's a rare combination in any asset class. Let me tell you what's happening on the ground level, away from the headlines and the official statistics. Small businesses are starting to accept silver for payment. Barter networks are forming. People are realizing that when the banking system hiccups, having real money matters. Not digits in a database, not promises from institutions. Real physical money you can hold and trade. I'm seeing stories of people who kept silver through the regional banking crisis, who were able to access their wealth when ATMs were limited and banks were closed. I'm hearing from retirees who diversified into physical metals and slept soundly while their neighbors panicked about bank failures. This isn't about getting rich quick. This is about financial survival. The system we've relied on for decades is showing its age. Cracks are appearing everywhere. And the people who recognize this early, who take action before the crowd, are the ones who will maintain their purchasing power through what's coming. Think about what money actually is. It's not paper. It's not digits on a screen. Money is a store of value, a medium of exchange, and a unit of account. For something to be real money, it needs to maintain these properties over time. Fiat currency fails at the first requirement. It doesn't store value. It loses purchasing power by design. That's what inflation is, the systematic destruction of your savings through currency debasement. Silver, on the other hand, has maintained its purchasing power for millennia. An ounce of silver bought roughly the same amount of bread in ancient Rome as it does today. Try saying that about any fiat currency that's ever existed. But here's the critical point most people miss. You don't need silver to go up in price to benefit from owning it. You need it to maintain your purchasing power while everything else collapses around you. When the banking system freezes, when bail-ins happen, when currency controls are implemented, when inflation spirals out of control, silver doesn't care. It's outside the system. It's no one else's liability. It just sits there, maintaining its value, waiting for you to use it. That's what be your own bank really means. It means holding wealth that doesn't depend on the solvency of financial institutions. Wealth that doesn't require permission to access. Wealth that can't be frozen, seized, or devalued by central bank policy. Let me show you the mechanics of what's coming. The Federal Reserve is trapped. They can't raise interest rates without crashing the economy and the government's ability to service its debt. But they can't keep rates low without fueling inflation and destroying the currency's purchasing power. There's no good option. Every path leads to the same destination: loss of confidence in fiat currency. When that confidence breaks, and it will break, people will scramble for real assets. They'll want things with intrinsic value, things that can't be printed, things that have stood the test of time. Gold and silver will be at the top of that list. But here's the problem. There's not enough physical metal to satisfy demand if even a small percentage of financial assets try to convert. The entire global silver market is tiny compared to bond markets, stock markets, or real estate. If just 1% of global wealth tried to move into physical silver, there wouldn't be enough metal available at anywhere near current prices. That's not speculation. That's basic supply and demand mathematics. And we're already seeing the early stages of this dynamic play out. Premiums are rising, delivery delays are extending, dealers are struggling to source metal. These are warning signs that the physical market is tightening. Smart investors are recognizing this. They're not waiting for confirmation. They're not waiting for mainstream media to tell them it's safe to buy. They're accumulating now, while metal is still available, while premiums are still reasonable, while most people are still asleep. Because once the crowd wakes up, once the panic starts, it'll be too late. You won't be able to find metal at any reasonable price. Dealers will be sold out. Premiums will be astronomical. And you'll be competing with millions of other people who suddenly realized they need to own real money. I've studied every major monetary crisis in history, and they all follow the same pattern. First, there's denial. Everything is fine. The authorities have it under control. Trust the system. Then there's awareness. Wait, something's wrong here. Then there's panic. Everyone rushes for the exits at once. And finally, there's acceptance of the new reality. We're somewhere between denial and awareness right now. Most people still trust the system. They believe their bank deposits are safe. They think the government will protect them. They assume things will continue as they always have. But the people who study history, who understand monetary systems, who pay attention to what central banks are actually doing rather than what they're saying, those people are taking action now. They're converting paper wealth into physical assets. They're diversifying out of the banking system. They're becoming their own bank. And silver is the most accessible way for average people to do this. You don't need to be wealthy. You don't need to understand complex financial instruments. You don't need to trust any institution. You just need to exchange paper currency for physical metal and store it securely. That's it. That's the entire strategy. But the window for doing this at reasonable prices is closing. Every day, more people wake up to what's happening. Every day, physical metal becomes harder to source. Every day, the system gets more fragile. Let me tell you what I'm seeing in the data that nobody's talking about. Silver mine production has plateaued. We're not finding major new deposits. Existing mines are depleting. And the economics of silver mining are challenging because most silver comes as a byproduct of other mining operations. When those operations slow down, silver supply contracts. Meanwhile, demand is exploding. Solar panel installations are accelerating globally. Electric vehicle production is ramping up. 5G infrastructure is being built out. Every single one of these trends requires massive amounts of silver. The math doesn't work. Supply can't meet demand. Something has to give, and that something is price. But price is just one factor. The real story is availability. At some point, price becomes irrelevant if you can't actually get the metal, and we're heading toward that scenario faster than most people realize. Industrial users are already securing long-term supply contracts, locking up future production. They're not waiting for spot market purchases. They're guaranteeing access to metal because they know what's coming. If industrial users are worried about supply, shouldn't you be? Here's the thing about silver that makes it different from almost any other asset. It gets consumed. Unlike gold, which mostly sits in vaults and jewelry, silver gets used up in industrial applications. It's in your phone, your computer, your car, your solar panels. And most of it never gets recycled because it's used in such small quantities that recovery isn't economical. That means the above-ground supply of silver is actually shrinking while demand is growing. That's the opposite of what you want in a commodity market if you're a buyer. But it's exactly what you want if you're already holding the metal. Every ounce of silver you own today becomes more valuable not just because of monetary factors, but because of fundamental supply-demand dynamics. You're holding something the world desperately needs and can't easily replace. Think about that for a moment. You're holding real money that's also a critical industrial commodity in short supply. That's an incredibly powerful position to be in. Now let me address the elephant in the room. People always ask, but what if the government confiscates precious metals like they did in the past? First, that was gold, not silver. Silver has never been confiscated in modern history. Second, that happened when the dollar was still backed by gold. The government needed gold to maintain the currency peg. That system no longer exists. Third, even if they tried, enforcement would be nearly impossible with millions of small holders. But here's the real answer. If we reach a point where governments are confiscating precious metals, you've got much bigger problems than your silver stack. That means the system has completely failed. And in that scenario, having some of your wealth outside the banking system, in physical form, becomes even more critical. The risk of not owning silver is far greater than the risk of owning it. Let me show you what's happening in other countries right now. Places where currency crises have already hit. Places where banks have failed. Places where people learned these lessons the hard way. In those countries, the people who owned physical precious metals maintained their wealth. The people who trusted the banking system lost everything. It's that simple, and it happens over and over again throughout history. Americans think it can't happen here. We're different. We're special. We have the reserve currency. We have the strongest economy. We have the most stable system. That's exactly what people in every failed currency system thought before it happened to them. The warning signs are all there. Massive government debt, unfunded liabilities, banking system fragility, currency debasement, loss of reserve currency status. These aren't abstract concerns. These are concrete realities playing out right now, and silver is your insurance policy against all of it. Not paper silver, not silver ETFs, not silver mining stocks, physical silver that you hold in your possession or store securely outside the banking system. Because when the crisis hits, and it will hit, the only silver that matters is the silver you can actually touch. Everything else is just another paper promise in a system built on paper promises. I want you to imagine two scenarios. In the first scenario, you take action now. You convert some of your paper wealth into physical silver. You store it securely, and then the system holds together. Everything continues as normal. What have you lost? Nothing. You still own the silver. It still has value. You can sell it any time you want. In the second scenario, you do nothing. You keep all your wealth in the banking system, and then the crisis hits. Banks freeze accounts. Currency loses value. Bail-ins happen. What have you lost? Potentially everything. The asymmetric risk is obvious. The downside of owning silver is minimal. The downside of not owning it could be catastrophic. That's why becoming your own bank isn't optional anymore. It's necessary. It's the rational response to an irrational system that's reaching its breaking point. Silver gives you that option. It gives you control. It gives you independence from a system that's increasingly fragile and untrustworthy. The people who understand this are taking action now. They're not waiting for permission. They're not waiting for confirmation. They're not waiting for the crowd to wake up. They're quietly accumulating physical metal while it's still available, while premiums are still reasonable, while most people are still distracted by the noise and the headlines and the false sense of security, because they know something that most people don't. The system is failing. It's failing slowly, then all at once. And when it fails, the only thing that will matter is what you own outside the system. Silver is your ticket out. It's your hedge against chaos. It's your insurance policy against systemic failure. It's your way of being your own bank before the banks fail. The question isn't whether you should own silver. The question is how much you should own and how quickly you should acquire it, because time is running out. The cracks are widening. The pressure is building. And when the dam finally breaks, there won't be any silver left to buy at reasonable prices. Don't wait for that moment. Don't be the person who realizes too late that they should have taken action when they had the chance. Be your own bank. Own physical silver. Protect your wealth while you still can. The system is failing. The only question is whether you'll be ready when it does.